Hey guys, what's going on? Paul here. Welcome back to another Cardano video. Today I'm joined by Ken from MELD to find out what's going on with MELD. MELD ran the first ISPO on top of Cardano. They have money markets, they have lots of different types of loans. So a lot of things going on. I got lots of questions about it. So Ken, very welcome. Thanks very much for taking the time to come on.
Thank you, Paul. It's great to be here.
Great. So look, we'll jump straight into it. For people who haven't heard about MELD, what it is, on kind of a high level, can you tell us what MELD is? And we'll jump down into some more of the details then.
Sure. So MELD is essentially a lending and borrowing protocol. So it's on the Cardano blockchain. It's DeFi, so it's non-custodial and decentralized. And the idea is that you're able to take your existing crypto assets, whether it's ADA-based or Ethereum or Polygon or Bitcoin, and you're able to lock them up into a smart contract and borrow against them. And you can borrow either crypto or you can borrow fiat. And so fiat is the real sort of key differentiator. So you can think of it a little bit like Celsius or BlockFi, except we're not centralized, we're not America-centric, and you get to keep the keys for all of your crypto when you go into a smart contract.
Nice. Yeah, money markets is definitely something I'm looking forward to coming online for Cardano, because there's so much potential with it, to not just for the base level functionality, but to build on top of that, and for other projects as well to build on top of what's offered with them. So you mentioned there a few different blockchains actually. So you've mentioned Bitcoin, Ethereum. You're going to be cross-chain then. There's interoperability there, is there, for the assets I can provide?
Yeah, so this was sort of key to us. We're not Cardano maximalists. We're not anything maximalists. We all are very fond of the Ethereum DeFi space. That's where a lot of us came from. But we are on Cardano for many, many good reasons. But we wanted to make sure that we could bring those assets across onto Cardano and be able to utilize all of the benefits that Cardano bring to the table while still getting access to that liquidity or getting access to those assets. So with that in mind, we teamed up with another company called Vent, and we've been building Automatic, which is a bridge between Polygon and Cardano. So with this bridge, which will go live when we go live at the end of January, the bridge will allow you to bring Ethereum assets and Polygon assets across onto Cardano, and vice versa, bring Cardano assets across onto the Polygon network and onto the Ethereum blockchain.
That's great to hear. And I agree on maximalism. There's no one blockchain is going to win this out, and it's going to be one in the future. There's going to be many different blockchains, and we have to be interoperable, and each one will have their own niche, but having the bridges between them is something that's going to be essential. So the Polygon bridge then, with that, actually, will they be able to bring stable coins over from Polygon to Cardano? That's something that currently is missing. I know there's different ones in the pipeline for coming, but a stable coin will be important when you have the likes of money markets.
Yeah, so what we're going to do is when we launch the bridge, we will launch it into beta and then do some testing. And then over time, we'll open it up and we'll expand it out in regards to its capabilities. So what we'd like to see is we'd like to see lots of assets from Polygon and Ethereum coming across onto Cardano and vice versa. But I don't have a specific token list or coin list for which assets are going to come across as of right now.
Okay, and Bitcoin will be able to use that as collateral as well?
Yeah, so Bitcoin in the sense of wrapped Bitcoin.
Okay. One other question actually I got when I put it out on Twitter was synthetic assets. Are you looking into them at all, or that's not there?
We're not. We haven't looked at anything in regards to synthetic assets for a couple reasons. One, our focus is on the lending and borrowing protocol and getting those mechanics working really well, focusing on the product that we have at hand. And two, we know that the SEC and Treasury are very, very sensitive about synthetics, and we'd rather wait until there's a better understanding from the US regulators in regards to how those things work before we decide to do anything with them. So we haven't had any dealings in regards to synthetics yet.
Yeah, and I suppose the regulation is something you really have to be aware of, because you're looking to bring in fiat into this as well, where other types of money markets are that I've seen haven't brought fiat into it yet. How has that been going? For anyone who hasn't heard, basically, I will be able to put up crypto as collateral and take out a loan in USD or potentially euro at some stage. I don't know if that's in the works.
Yeah, of course. It'll be USD and euros and potentially other currencies as well. So that's actually going really well. In December, we were able to finalize a bunch of agreements that set that process in place. So that has been finalized, and we now have a project path towards a delivery of being able to do the lending and borrowing from crypto to fiat sometime in Q3 or Q4. So we're super happy about that because it's a very, very difficult process. Not really anybody else has cracked this. And so we've been working very hard to try and make sure that we were able to solve this problem in a completely legal and licensed manner.
Yeah, I'm sure it's definitely something that's difficult. The traditional markets are not the biggest fans of crypto right now, so trying to get something to merge with them probably isn't the easiest job.
Well, I mean, remember, a lot of this stuff is media talking. So from the relationships and the conversations we've had with regulators, of course, we have met some regulators that are very hostile, but the majority of the regulators that we've spoken with are not hostile. They just want to be able to apply the same level of rigor to the crypto part or the sort of interfaces into crypto as they apply to the banking space. And so it's less about this kind of we hate crypto for most of the people we talk to. And it's more, you have to be able to provide us with as much documentation and architecture and structure and risk modeling that we expect from traditional banking players or traditional financial organizations. So we've had a reasonably good response from regulators and other financial institutions.
That's good to hear anyhow, because it's definitely something I want to see coming in. In terms of collateral then, what type of collateral will people have to put up? Is it the traditional, you can take out half, 50% of the collateral you put up? And is that
correct.
Set? I know the likes of Celsius give you different interest rates if you put up different collateral, or is it one set collateral type for you? Or one set rate?
No. We'll have various different collateral types. We'll start out very conservative. And then as we get some more experience under our belt, we'll iterate on that, iterate in regards to our models, and then sort of modify them to be able to increase, potentially, hopefully, be able to increase the LTV. And then we see that as kind of, you need to have a better understanding of different market behaviors, which parts of the market and which data from the market you need to look at in order to be able to offer these things. Our goal is to avoid any kind of liquidation event. So we're not looking to make something where people can over leverage their position. We're looking to make something that allows people to unlock some of the value that they have in crypto in the physical world. And so these are two very, very different things, and they create a different personality in regards to the protocol. And so we're not going to be high risk because we don't want to see a situation where there's a flash crash and then there's a cascading liquidation event like you've seen on Maker and several other of these types of protocols.
Okay, and one other thing that really jumped out at me was, I think it's Genius Loan. Is that where you have the self-paying loan? That's something that really piqued my interest.
Yeah,
how
so
is
this piques a lot of people's interest.
Yeah, I'll let you explain it for people who haven't heard what it is.
Yeah, so Genius Loan is very simple. It's a loan that pays itself off. So when you put up your collateral, that collateral is then used for us to be able to make yield on that collateral. And then instead of taking all of that yield as profit, which is what a bank would do, we take all of that yield and we divide it up. Some of it goes to profit, some of it goes to protocol fees, and some of it goes to pay off the principal on the loan. So you still have to pay the interest on the loan, right? But in most countries, interest is a tax deduction. So you have to pay the interest, but you don't have to pay the principal down. The protocol itself and the collateral will pay down the interest. So there is nothing really unique about this. The uniqueness is about the lack of greed, right? So all we're saying is we're not going to be greedy and take all of that yield. We're going to take some of that and we're going to divide the rest of it up. And part of it is because that's how we want to do it. And we see that doing something like that creates a much more balanced relationship between the lender and the borrower. But also it's the ability to we're leveraging the fact that the blockchain is transparent. So had we decided to take all of that yield as ours, because we're a DeFi protocol, everybody in the blockchain could see that, so they could see how greedy we would be. And so because of this transparency, we're kind of trying to change the dialogue or change the relationship between the lender, the borrower, and the protocol so that everybody sees that everybody needs to make money.
Okay, yeah, it's definitely something that's very interesting, especially from a tax perspective. We won't get into tax because I'm not a tax advisor anyway. Don't know about you, but I don't want to be putting that out there.
Do not provide tax advice.
Yeah, but there's definitely some areas I'll be getting the accountant to look into when that type of a loan is available, because to be able to use your crypto without cashing it out specifically is definitely something to explore.
Well, I mean, this is not new, right? This is debt financing. Yeah. So this has been done for, 80, 100 years.
This is what the rich do. They'd never sell assets. This is how they keep getting richer and richer, is because they use their assets and let their assets work for them so that they can buy more and more. So it's bringing that into the modern age and giving it to anybody who wants to try and use this.
Exactly. So the idea here is that we want DeFi provides this toolbox of financial instruments, and we're able to provide all of those instruments to everybody, anybody. It doesn't matter who you are. And part of the idea behind Cardano is this idea of capital efficiency, the fact that it's, there are cheaper gas fees and all this kind of stuff. If you have a half a Bitcoin and you want to borrow against that, that's going to be an expensive proposition if you're on Ethereum. If you've got 50 Bitcoin you want to borrow against, it's not a problem. Those fees don't even sort of come into the equation. And so it's this idea that with this capital efficiency, these instruments that we're producing, these lending and borrowing and mixing them together to do different things, become more available to a much larger audience of people. If you have to pay 1 or 2 ADA for a transaction, that's not a problem, right? So you can do lots of transaction. That's much lower than what a bank charges. And so we wanted to expose these instruments out to the public so that everybody could use the things that have currently been locked away and only available to the extremely wealthy or well-connected.
Yeah, that's what DeFi should be, is bringing these opportunities to the mass market, giving everybody the opportunity if it's what they want to get involved in. And actually, one other common question I got about the collateral. So if I put up ADA as collateral for a loan, do I still have control of that ADA to stake it and earn the staking rewards, or does the staking rewards go to MELD?
We haven't decided exactly how that's going to work. We have decided that some of the staking rewards will go back to the lender. So you would lock up your ADA, and then you'd borrow against that, and then it would get staked, and then some of that would go back towards a volatility pool. So in other words, it would go back to a treasury that would then be used in the case of a flash crash to make sure that loan did not get liquidated. Some of it would go towards the protocol, and some of it would go to be paid back to the user. So there would be a negative 1% interest loan or something like that. So yes, we have considered it, but the yield on that ADA would go to several different places to solve several different problems.
Okay, so essentially if I'm putting up ADA as collateral, the interest rates that I will be paying will be slightly less because I'm getting a part of the staking rewards back.
Correct. Correct.
Okay, so moving on then to where are things at now? So how has development been going? You mentioned the end of January there earlier on. So where are things at now, or when can we expect
So
to
we're
see?
launching January 31st. It's been a real sort of tough development process, but it's been good. So we're working very closely with IOHK. We've just finished our security audit in December. Everything went completely fine. There were no problems there. So you can go to our technical journal on our site and you can see the security audit. So all that's public. In general, I think that the sort of the development in the ecosystem is super healthy. Everybody is working together. Everybody is supporting each other. It's a bit slow, but it's just a matter of sort of timing. And so we see that we're still on track for launching Q3 of this year in regards to lending and borrowing. We're obviously running into some issues in regards to performance, but we've been working with IOHK and other developers in Cardano to sort of work through these things, and we will, and it will happen. But it has been a bit of a challenge. But we're still on track for the 31st. We'll launch. We'll have limited functionality on launch day. We'll have our wallet out there, and you'll be able to stake MELD. You'll be able to pay for the automatic bridge. You'll be able to do these various different things. Then after this launch, then we will, rather than waiting for another major launch, we'll do small iterative launches to add functionality and do bug fixing and add performance and these kinds of things. But it's been really good in general. I think that the fact that there are these issues that need to get addressed has kind of galvanized a lot of the developers to work much more together. And we see that there's a lot of communication that's happening across the projects in order to sort of solve these problems. What we're not seeing is this kind of doomsday attitude of, oh, now it's not going to work. We've made a bad choice, or that kind of conversation isn't coming about. What we're just seeing is that this is something that has to be solved in a unique way. It has its own unique architecture. It's worked around UTXO, so we have to solve things in a very specific way that is going to be unique to us. And therefore, we need to all come together and make sure that that happens.
Yeah, it's great to hear the security audit is done as well. And you actually released a 2021 review as well, which I thought was very good. Lots of detail in that. So I'll put that down below as well, actually, for anyone who wants to check it out. But I can understand that there's probably a bit of frustration in developing as well. When you're working on something new, it's unfortunately not going to work just as smooth as people want. But I think long term, it's going to be very, very good. With the UTXO model, it's going to bring its challenges, we'll call them, and working things out. Even Cardano right now is, some of the parameters are set fairly low, but from reading the recent blog posts, we're going to see them increased over the year, and the throughput and the speed of the chain is definitely going to improve over the year. So by the time you launch your full money markets, I think we'll be looking at a very different Cardano as well than we're looking at today.
Yeah. And I think most people that are developing in this space have this same sort of sentiment. So everybody is still very optimistic. We're just kind of internally frustrated because everybody wants to move super fast.
Yeah. And it's, I suppose, the expectations of the market as well sometimes aren't as aligned with where the actual chain is at and where the projects are at. And
it's hard to get the balance. Right?
Yeah. Oh yeah, it's across the board. It's look, we all want it right now, and why can't you launch tomorrow?
Yeah, and we want the same thing as well. We want to launch tomorrow as well. So it's just as frustrating for us. But yes, we can be completely sympathetic with all of the people that are token holders or are part of the ISPO. Everybody wants to see this out there. But we have very, very strict parameters we work against. So our number one priority is security. End of conversation. Security, security, security. And so we need to make sure that we meet that sort of prime directive, so that we're not going out there and we run into some sort of problems, because that will not only reflect on us, it will also reflect on Cardano as a whole. And so we need to be very aware of this. This is also the reason why, in addition to the development team working on MELD, we also have a secondary product that we don't really talk much about, because it's not a product for sort of the sort of DeFi space. It's called Hachi. Hachi is a open source tool that we're working with, and we provide to other partners to do security audits and do smart contract audits. And so the audit that was done on our system was, they used Hachi also to do auditing on our system. And we are developing Hachi in collaboration with a research organization and a couple of other development teams in Cardano, because these tools are going to be necessary for everyone. We have to have these kinds of tooling in order for Cardano to be a more mature development environment, a more mature blockchain. These tooling exist already on things like Ethereum because they've been around forever, right? So they've had time to build these things. Cardano is still very young in regards to the smart contracts. And so these toolings and these tools haven't really existed. So we've decided that we're going to actively participate and actively build some of these tools and work with the community.
Yeah, it's great to hear the projects are working together, because look, long term, that's going to build up the whole Cardano ecosystem and hopefully make all of the projects that are working together, make them better. And as you said, with security being your number one, and it's great to hear that, because especially in the sector that you're in, with the money markets, potentially billions locked up in volume on your smart contracts, security has to be number one. So
yeah, absolutely.
It's like not just your name, as you say. If you put out your contracts, there's a breach or something goes wrong, it affects the MELD name, the MELD brand, but it also does affect Cardano. It's like, oh yeah, look, Cardano has these holes. It was meant to be secure, but we all know, look, it's down to Cardano can be secure. Haskell is meant to be a very secure language, Plutus, but everyone still writes individual contracts, so they have to be audited. And tools like yours sound like a great way to help people with that. Yeah.
So if you're a developer, it will help.
Great. So you also mentioned there the ISPO. How did you find that? I suppose it was the first one to run on Cardano. How was that experience?
Yeah. So the ISPO came about when I was standing here where I am now, and I was listening to Rick McCracken. And he had someone from Occam on his podcast, and they were talking about the Occam ICO that they did. And the Occam ICO was a really kind of touchy point, because it was on Ethereum. A bunch of bots bought up all of the liquidity. Almost nobody from the Cardano ecosystem managed to get anything. It closed in like 28 seconds. This wasn't anything that Occam had done wrong, but there was a big outcry. And so after listening to that, I was just thinking about, how can we do a more fair launch? What are the tools that we have at our disposal to do a more fair launch? And it just sort of came to me, we have this ability to do staking, and I'd been staking. What if we just swapped it out? What if we swapped out the MELD rewards for a token? They do this already on Solana, right? So it just kind of hit me. I thought that I had come up with the idea. So I was extremely proud of myself. I called a friend to verify it, that it was something that could be done, or that it was a good idea. And they thought it was great. And then I called my co-founder, middle of the night, and I talked to him, and I said, look, I have this fantastic idea. And I explained the ISPO, and he's like, his answer was, oh yeah, I mean, we've been talking about this in the Cardano space for like 6 months. So it was a bit of a letdown, but that's fine. So I'm clearly not as smart as I thought I was. And we talked about it again then for maybe 2 weeks. We went through the specifics. I think a few days after we started it, or a few days after we started planning it or thinking about it, we did a due diligence with our law firm. And when the due diligence came back with a green light that it's legal and acceptable and all this kind of stuff, then we announced it and we launched our ISPO on July 1st. We didn't know what was going to happen. We didn't know, what to expect. We had some people telling us that this wasn't going to be anything. No one would ever consider doing this. We had some people saying, man, you better open up like 8 stake pools right away because it's just going to be a watershed. We just didn't know. And so I think when we started, people started staking before the ISPO started. I think we were maybe 5 million or 6 million the day that we started. I think we were up to around 11 million by the end of the first day. And by the following morning, we were above like 70 or 80 million. And then by the end of the first 24 hours, we were over 100 million. And that's when we knew that we had completely misplanned or sort of did not sort of expect or weren't prepared for what was going to happen. And from that point on, it was just kind of trying to keep up, trying to meet expectations, trying to solve problems and answer questions. And it had never been done before, right? It had been talked about a little bit, but it had never been done before. And so when you do something, doing it introduces lots of questions that you have to answer. And when there's no history to draw upon, then it can be very difficult to make the right decision. And so we made some right decisions, we made some wrong decisions, we made some mistakes, but I think in general it went really well. So we did it for 52 epoch, so it ended on December 6th. And yeah, at the end, I think it's sometime in end of October, we peaked out at 640 million in the ISPO, and then it slowly, we sort of stopped it at that point. That was what we said our limit was going to be. And then we slowly sort of tapered off until the very end.
Okay, yeah, it's an interesting model. It's controversial in lots of circles as well on if they're good, if they're bad. And I suppose there's different, I think we're going to see so many different variations of this over the next year as well as a way of raising funds for projects. So it's going to be a very interesting space to watch and see how it develops and see how the community adapts then as well to this type of behavior in the ecosystem. I
think that one of the things that you can say about it is this form of financial innovation is enabled by Cardano. Yeah. So you can't really do this on any other blockchain. I think it was maybe 2 weeks after we started the ISPO, some Ethereum 2.0 stake pool lost their keys and they lost like $125 million in ETH, just whoosh.
Yeah.
So I think that this kind of hails back to the idea that Cardano was a well-architected, well-planned, well-structured blockchain. And that will, over time, yield much more than a more narrowly less well-planned or less well-structured blockchain.
Yeah, currently staking on Ethereum isn't for the normal retail investor. You need 32 ETH to actually stay or to run your own node so that you keep control of it. If you don't have that, you have to stake somewhere else. But unlike Cardano, you have to give up custody of your crypto as well. So yeah, it's not something for me. I wouldn't be the biggest fan of it. But the other question I got was, when are people going to get their tokens as well? So the tokens from the ISPO, when can people get them?
So the token event is on January 31st. So we're only a few days away now from our token launch. And we'll be launching the token and we'll be launching our web wallet, MELD app. So everybody will be getting their tokens and they'll be able to start sort of trading them or using them or doing whatever they want with them from January or from February 1st.
Okay, and is there vesting on that, or do people just get all of their tokens on the 31st?
Yeah, so this was also connected to the model of the ISPO. So the ISPO participants, they have to use approximately 40 times the amount of capital in order to achieve the same result as a private sale token buyer. And so what we decided to do was balance that relationship out so that ISPO holders have no vesting. They get all of their tokens from day one, while private sale token holders have a 4% vesting per month. So their tokens don't yield for the first 2 years.
Okay. Nice. Yeah. I always like to see that there is vesting for early investors so that on day one, you don't get this mass dump onto the market, as unfortunately we see when things aren't structured as well as they could be. And will it be an airdrop?
We saw this. So we saw this. Sorry, I don't mean to interrupt, but you know, we saw some investors when they found out that every investor was treated the same, that everybody had a 4% yield. I mean, team members don't. Team members have a much longer yield or a much longer vesting. But when they saw that they weren't going to be able to have this big pile that they could then spend on day one, a lot of investors just walked away. They weren't interested. They weren't interested in the
They're not the investors you want when you're thinking long term anyway. It's not worth that money, whatever amount it is. It's not worth having that in.
Exactly.
And as well as that, is it an airdrop or do people have to claim the tokens?
So the vesting will happen through the wallet. So yes, you'll go and you'll get your tokens through your wallet. The tokens will end up in your MELD wallet, and then in the MELD wallet, you'll see the vesting mechanics, and you'll see how much is vesting, and you can withdraw. You can withdraw on a per epoch basis. There's been prorated against that. But if you leave your vested tokens in for a period of time, then you'll get an additional bonus.
Okay, and just when you say vesting there, so is that vesting for private, or there is some type of vesting then for the ISPO holders?
No, there's no vesting for the ISPO holders. It's only for the private token. Sorry. It's only there for the private token holders, or private sale token holders.
Okay.
So there's no vesting for ISPO.
And for the ISPO, they will have the same process, just into their MELD wallet, and that's where they can get access.
Well, they'll get airdropped into the wallet that was registered as part of the ISPO.
Okay, very nice.
Right? Yeah.
Yep. And there's another thing going around as well, the bank manager NFTs. Can you tell us what they are, how people get them?
Yeah, so the idea behind the bank manager NFT was to create a way to sort of introduce NFTs, which is a really interesting and fun thing, but to bring some sort of functionality to it. And so we've made it so that all of the ISPO participants will have the right to mint a bank manager NFT. They can then use that bank manager NFT in the staking pools in the wallet. And that bank manager will in turn boost up the yield that they get for staking their MELD token for a period of time.
Okay. And is that only people who are involved in the ISPO can get them, or is there another market for?
No, it's only people that were involved in the ISPO that can get them. So this is a kind of a thank you. You know, the ISPO is interesting because essentially what you're doing is you're building a relationship with a bunch of people that have through pure trust, that have believed in you. You know, there is no formal contract. They have trusted in MELD, and they have put that faith by delegating to the ISPO. In no small measure is that a serious deal. Imagine anywhere where there's a financial transaction, or not a financial transaction, there's some sort of financial commitment where people believe in you and they're willing to put their tokens in your stake pool without any kind of contract. And so we take that very seriously, and we think that the NFT is a great way to give back to the people that participated in the ISPO. And so only the people that have verified wallet IDs coming from the ISPO will be able to mint the bank manager. And when they mint it, then that will entitle them to a higher yield in the stake pools.
Okay. And is that coming January 31st as well, or is that in the future?
Well, we don't know. We don't have a specific date right now, but it'll be somewhere close to the launch.
Okay. And is there future value on that in terms of lending and borrowing? Is there anything looked at there, or
the bank manager at this point will only have a single function of boosting the yield for the stake pools. If it has some other functionality in the future, we haven't designed it yet, and we don't know whether it will. The idea of the bank manager might continue and evolve over time, but the specific NFTs, we're not sure whether they will have a lifespan after the end of the ISPO, or sorry, after the end of the stake pools.
Yeah, perfect. I see we're coming up now on 35 minutes, so I won't take up much more of your time. But
no problem.
Partnerships, you've had a lot of different partnerships over the last few months. Do you want to talk about some of them? Any of them you want to?
I mean, the last partnership was with Maladex. Well, that's not true. It was Maladex, and then it was Anegra. But I think that Maladex is one of the bigger relationships. We've seen a kind of kindred spirit in regards to how we approach financial instruments and how we approach sort of DeFi with them. So we've built a really nice relationship with them, and there's a lot of sort of back and forth with the Maladex team and our team. So I think that's probably been the biggest partnership in recent days. We're not doing much in the way of partnerships right now, because now the focus is on building the product and delivering the product. We will continue to do partnerships in the future, but probably at a slower pace.
Yeah,
because we need to deliver on the promises we've made so far.
Okay, yeah, Maladex is definitely someone I'm hoping to have Eureka on the channel at some stage as well. Anytime I've heard him speak, he seems to have brilliant ideas. So
yeah,
I'll hopefully have him on to pick his brain at some stage on what exactly they're doing. And their approach is a bit different than some of the other DEXs in the space as well. Yeah. So it'll be interesting to dive into that. And you partnered with World Mobile as well. And I think that's a good one. I don't know what exactly you're going to be doing there, but I'm a big fan of what World Mobile are trying to do as well. And was it Tingo? Was that the...
Yeah, Tingo is a Nigerian mobile carrier, correct? So we're working with them. We're going to be putting the MELD wallet on, they have 10 million subscribers in Nigeria. We're going to be putting the MELD wallet on all of those mobile devices. World Mobile, the relationship with World Mobile is we want to work with them to be able to build some sort of financial instrument that makes it easy for people out where the World Mobile network is going to be deployed to be able to finance these pods, so that they don't, we don't want somebody else financing the pods in the stead of the person who's going to benefit from it, because then they don't really participate in the financial ecosystem. They only participate in the network. So we're working with them to figure out how to create a financial instrument where we can help people afford those pods in a way that doesn't, massively put them in debt and, these kinds of things.
Okay, yeah, great initiative, as well as whatever else is going to be behind it. But to be able to, what World Mobile are doing, I think is brilliant. But sometimes the finances mightn't be there from locals, especially in rural areas, to be able to afford the infrastructure, even though it's a lot cheaper than some other providers will be able to have. But great to see that there's talks there anyway to see what can be done. And in terms of MELDs, then we'll finish up on what's next. We've probably covered a lot of it, but I'll leave the floor to you for anything I've forgotten about or what we can expect next.
Yeah, I mean, next is launching. So launching the application, launching the token, getting out there in the world, building the application up more, adding more features to it, making it faster, more robust. That's the focus right now, not to sort of expand in new areas, but to focus very much on the promise that we've put in the white paper.
Great. So you know what you need to do, and it's just getting it out there before looking into what else can be done.
Exactly.
Actually, I know something else I forgot to ask on. The token drops on the 31st, so it'll go live on DEXs, I presume, at that stage, whatever ones are available
DEXs,
in the
we're
market.
not sure yet. We've got commitment from one centralized exchange, and we're just waiting for answers back from, I think, some 6 other exchanges that we're going to go on to. As soon as we have a contractual commitment from the exchanges, then we'll publish the dates as to when they'll go live.
Oh, great. Yeah, I know that was another question on the Twitter post that I put out as well, and people interested. It's great to see on that side as well. DEXs are coming online, and there's different centralized exchanges are starting to support Cardano native assets. So it's all stepping stones to where we want to get to.
Absolutely. Absolutely. It's going to be a super exciting February.
Yep. Great to hear. And look, we'll catch up again in, say, another month or 2 or 3. We'll see how the launch is going. And you might, if you have time, you can come back on, give us an update on how things are looking. I appreciate your time today. Hopefully everyone watching has got some value from it as well. If you guys watching have got value, make sure you share it out there. Let us know down below if we've missed anything. Subscribe, give the video a like. Ken, thanks very much for coming on.
Super. Thanks for having me, Paul. I'll talk to you later.
I'll talk to you soon.
Bye.